You might be wondering what a conflict happening thousands of miles away has to do with your ability to buy a house here in the United States. The connection is more direct than most people realize, and understanding it puts you in a much better position to make smart decisions right now. Here is how the chain reaction works. The conflict with Iran pushed oil prices higher. When oil prices rise, the cost of transporting goods, manufacturing products, and running businesses all goes up. That feeds directly into inflation, and when inflation rises, or even when markets fear that it's going to rise, the Federal Reserve holds back on cutting interest rates. Here's why this matters to you specifically, though. Mortgage rates had briefly dipped below 6% for the first time in over 3 years. That was a meaningful milestone that brought a lot of buyers back into the market and created real momentum. Then oil prices spiked, inflation fears return, and mortgage costs jumped back up. The mechanism behind that move is the bond market. Mortgage rates follow a 10-year treasury very closely. When investors get nervous about inflation, they sell bonds. When bond prices fall, yields rise. When yields rise, mortgage rates with them. So the sequence looks like this. Oil prices go up, inflation fears increase, bond yields climb, mortgage rates follow. Your monthly payment goes up. That is not a story about politics. That's a story about how interconnected the global markets are and how quickly something happening overseas can show up in your housing payment. So what do you actually do with this information? First, understand that rate volatility is real right now and build that into your planning. Do not assume the rate you see quoted today is the rate you will have in 60 days or 30 days for that matter. Second, talk to your loan officer about rate lock strategies. Depending on your timeline, there are options to protect yourself from upward rate movement while you are shopping for a home. Third, explore seller-paid rate buy-downs. In a market where sellers are making concessions, you can negotiate for the seller to buy down the rate a little bit, and that offsets some of that impact of raising rates. The buyers who get frustrated right now are the ones watching rates like a scoreboard, waiting for that perfect number. The buyers who win are the ones who understand why rates are moving, plan around it, and use every available tool to make a deal work. If you want to walk through what current rates mean for your specific budget and how to structure your purchase and protect yourself from volatility, send me a DM and give me a follow, because when the market shifts like this, being informed is the biggest advantage you have.